Welcome to this edition of Inside America's Boardrooms. I'm TK Kerstetter, and I'll be your host for today's show. We're going to be talking about taking advantage of the board investor relation officers relationship. And joining me is somebody that knows just a little bit about this topic, and that is Rebecca Corbin, who's the founder and CEO of Corbin Advisors. For those of you who don't know, Corbin Advisors is a specialized capital markets research and advisory firm, and as a subject matter expert on investor relations, they advise boards and executives on strategies that maximize shareholder value. So welcome, Rebecca.
Thank you for having me.
So this is a topic that really I haven't covered yet, but it's interesting that everybody, when we talk board issues, sort of talks about corporate secretaries, but nobody speaks that much about the investor relations officer. Yet, certainly they're a team, okay? But why don't we hear more? Because the investor relations officer is talking to the investors and the sophisticated investors, talking to analysts, et cetera, et cetera. So why don't we hear more about the investor relations officer?
Yeah, well, I think it's a great question, and thank you for asking it, and thank you for elevating investor relations by having us on your show. I think if you think about the investor relations industry, it's roughly around 50 years old. So it was born in 1969 in terms of the National Investor Relations Institute's founding. And it has been a very slow evolution to get to where we are today. So I would say in our experience and what we're seeing is more and more boards are interested in investor relations, and quite frankly, it's value creation, right? The investor relations professional and officer is actually a misnomer because many are not officers of the company, and it should be elevated to that role given the importance of the function. But many investor relations professionals are focused on making sure that the stock's valuation in terms of what the company is worth and what the perception of the financial community is aligned. And oftentimes there's a disconnect, correct? And so, we're starting to become a lot more strategic with regard to investor relations, and I think the emphasis needs to really be placed on the value that management places on investor relations. It's a team sport. And truly, best-in-class companies that understand how much impact investor relations has, resource, source, support, and are advocates for the investor relations function at the organizations. And if I can just end on one point, we've conducted extensive research from the buy side and sell side on the value of impact of IR, really trying to quantify how much of a stock's valuation is supported by that. 89% of investors that we survey say that investor relations, and again, investor relations is a team sport, CEO sets the tone, tenor, transparency of the company, say that investor relations influences valuation. 38% on average say that good IR influences valuation. Conversely, on average, 41% of a stock's valuation can be affected by bad IR.
Yeah. So let's get to the meat of this. So what should a board expect from an effective IRO?
Sure. Well, I'm going to speak and assume that we're dealing with a highly competent strategic investor relations professional that has that management support. Really, they're at the forefront and on the front lines of the public company with regard to being the liaison between the company and the financial community. So the board and the IRO should really demystify the Wall Street, the global markets for the board, truly understand the perception and sentiment of their investor base. Do they understand our company's story? Do they have knowledge gaps around what we're doing from a strategic perspective? Do they understand management's value and what management brings to the table? And so, really for the IRO, it's understanding that value gap and providing strategies to the board in terms of how we are minimizing that gap.
And I would expect that they're the first ones to sort of know if somebody's taking a position in the stock or whatever. They need to know the best they can who's in the stock.
Well, and it's also, as I mentioned, an under-resourced function. Typically, 1.5 folks are dealing with, $3 billion, $6 billion company, the investors, the analysts. Some companies have 6 analysts, some companies have 50. And so, it's a job that really needs to be supported by a team. And in order to have that research available in terms of who takes a position, you actually have to work with a firm on the surveillance side because 13F filings are filed quarterly, 45 days after the quarter. So in order to have that deep insight into real-time information, you need to have partners in the field. They also are oftentimes the ones that will be contacted by an activist first. The activist is really looking for, is this company, and I'm going to go through the investor relations professional, is this company open-minded or are they defensive?
So let's flip that question and say, okay, so now what can the board do that will help the IRO be more effective?
I think anything that is elevated to the board level has greater emphasis at the organization. And so we feel, based on the research that we've done, IR is a highly critical role that truly drives stakeholder value. Because when we talk about shareholders, employees are shareholders too. And so, the stakeholder mentality of being resourced, being effective at their job, and making sure that they are creating value, and maybe it should be called value creation officer. Really, if the board places emphasis on that, if the board understands what is the profile of a highly sophisticated, impactful investor relations professional and potentially an officer of the company, more effort will be focused on that to, again, make sure that the company's value is aligned with how Wall Street or the global financial community is valuing that company.
Well, we both know that different companies value the IRO function differently, and maybe this segment will help raise the level a little bit. But before we wrap up, and the fact that you're on air all the time talking about shareholder value, I thought you'd be the perfect person to ask this last question. So I'm sure you've seen through institutional investors this movement on purpose. They're moving away from the shareholder-centric model towards this purpose over profits kind of deal. It's going to be interesting to see in the future, but what's your initial take when you hear about all this? I think, and I'll preface it by saying, I think we understand the value, of this social transformation, but we really haven't seen all this live together as far as shareholder value.
Well, it gets back to the proprietary research that we've been doing for over 12 years. And when we look at what drives long-term fundamental investors to be attracted and invest in a company, there are truly 5 fundamentals that they're looking at: management, long-term vision, an execution track record, sustainable competitive advantages, and capital allocation and the effective deployment of that. Our whole entire philosophy around advising clients is based on that research that we're doing on the buy side. So when we unpack that a little bit, competitive advantages, sustainable competitive advantages, most investors place the most emphasis on high barriers to entry, operational excellence. They also place emphasis on culture. And that can be a sustainable competitive advantage. In my 20 years of capital markets and conducting what we have trademarked as voice of investor research, the first time in 2008 was when we were conducting perception studies, what we call our value creation studies, was when culture was actually identified as a competitive advantage for certain clients that we were working with. So I've been, and we as a firm have been advising our clients on purpose-led culture because we do see that as a significant impact for many, many years. There are companies that have been very progressive around developing culture, investing in their employees, and we wholeheartedly agree with Business Roundtable's move to put a stake in the sand and truly change their philosophy or positioning around the shareholder to the stakeholder. And it's true, when you focus on your customers, when you focus on your employees, especially in the race for talent, you can have a significant impact on value creation on many levels, and that, of course, will reward the shareholder.
Well, it's going to be interesting to watch. There's no question that we're in a transformation, not just digital, but societal. And when push comes to shove, that's when a company maybe has a down period, that's when we're really going to be able to test that system.
Absolutely, and it's not that companies are not going to be profitable, right? This is about, and if you think about ESG, it's about the opportunity as well as understanding the risk of an organization. Purpose-led culture falls right into that S. And you can still be profitable if you're focused on this, because truly what gets measured gets done. And so we think that this is going to be a way of life. It's getting a tremendous amount of airtime, which is great because the power is with the corporation. Being a good corporate citizen is a good thing to be.
So right now, all our studies say that there's still a gap in the directors understanding this. So I think there'll be a lot of efforts to bring this closer, and it's actually going to be very interesting to watch. And you can't argue with purpose. Purpose makes perfect sense. So I want to thank you for taking time out of your busy schedule to join us, and some great comments, and we'll look forward to having you back someday.
Appreciate the opportunity.
And that will conclude this edition of Inside America's Boardrooms. We hope you enjoyed the show. We'll be back again next week when we take another look at a critical topic that'll help you be a better board member or committee member. So we'll see you then.